Hey, what's up, guys? Just wanted to put together a hopefully shorter video. I've been getting this question considerably more now because it's the end of the year. But the biggest question is, how do I invest with Adam, and can I invest with Adam? Big questions. The short answer is, first, with the disclaimer, you have to be an accredited investor. And I think I've already gone over what an accredited investor is, which is usually, making $200,000 plus as an individual, or if you are married, $300,000 between the two of you. As well, you can, avoid that qualification if you have $1 million or more, as far as assets or capital outside of your primary residence. Um, that is actually the biggest question that we're getting asked more and more. And I wanted to let you know, with inflation, especially a lot of messages I got actually over the past week. I feel like I'm an accredited investor, but I feel like I just don't have enough money to invest with you. And that's totally reasonable. That really is reasonable. We're only trying to take on investors who, not only meet the accredited investor column, but are looking to, really not be Henrys anymore, or, high earners, not wealthy yet or not rich yet. And the biggest problem we're facing is, $200,000 for yourself, or $300,000, between you and your significant other, used to be considered a good amount of money. And $1 million is still, considered an amount of money that, if you do have this kind of capital, you can definitely invest. Now, my biggest thing is, of course, we don't want the investment cap to be increased for those who, are making that 200,000 or 300,000. But I've noticed that, our median first-time investor with us are making usually, $400,000 to $500,000. That really is usually the time period where a lot of people are making the first investment. We've got a lot of physicians, who are making that amount, small business owners, partners for law firms, or business owners. Again, business owners are usually the ones that are the biggest investors investing with us in our investments, simply because we are giving on average over 20% internal rate of return, if not higher, which your stock market investments might have one good year, but they're going to average over the next 25 years somewhere between 7.2 and 8, if not 7.95. So, I've been getting that question a lot, and I want to let you know, you are not the only one. It happens, you're making that kind of money, but, you live in, say, recently, 7 out of 8 of the places that you need to make $200,000 or more to even buy a house are in California. And we have a lot of people in California who can't afford to invest with us, let alone, they're barely making a living. And that's if you don't work for Meta, Facebook, Twitter, whatever, these types of companies. So the other thing you have to remember is, it's not just about making that income if you're making $200,000 to $300,000 a year. It's about maintaining it. If you are not working right now and you're looking to invest, I'd say do an evaluation, because if you don't have $1 million or more, you are not an accredited investor. You are someone who does not have the basis, actually. I had some people recently who were unfortunately let go from some of these large companies who said, I'd like to put in 250, 300, 50, whatever. And I said, you were recently let go. What's your total amount you have? Simply because we don't guarantee our investors anything. We put strong regulations on what we want to try to do. And again, that's the biggest issue. I've got most of our investors, or most of our investments, are investments that are between 3 and 5 years as far as length, where year one, you might not really get a return. You might really not get a return. Even though we're saying we're going to make a 20+% return, that does not mean you're going to get 20% plus year one. That means that you will, over that 4 or 5 year period, including exit, make that type of money. And to be fully transparent, we do vet our investors. We used to take on significantly more, participants who just met the criteria. Now I interview every single person. Types of people we don't want. We don't want someone who wants to call me every single week asking how your investment is. We're eventually not going to answer, or we're going to shoot you an email saying, don't message us every week. We send out monthly updates, quarterly updates, annual updates, on top of the updates that come out when you get dividends. If that's something that you don't feel comfortable doing, stock investments, you at least have to see your portfolio every single day. That's a different type of investment for a more simple type of person. Anyone can put money in the stock market. The reason an accredited investor can only invest with me is because, we work with the savvy investor, not just accredited. You're looking for long-term returns. You're not just looking for building that empire where it's around for one generation. You're looking to build that dynasty where the wealth is preserved, protected for the next couple generations, 5+ generations. You're looking for dynasty money. That's something that a lot of people don't know. A lot of investors, who might be physicians, who might be hardworking, are prone to something we call the 3-generation curse, which is the first one builds it, the second one grows it, the third generation spends the money. So we're not looking for people who are at that point. We're looking for people who want to continuously grow. We're looking for people who want to educate themselves. We're looking to educate, down the road your children. We're looking to make sure you've got that generational wealth. So it's definitely a longer term strategy. We have partnered with one group, which I won't mention without their permission on this call, where we are going to be giving, monthly dividends. And that starts end of month 1. Those are called debt funds. I personally will not secure you on a debt fund because I'd rather give you investments while we're making investments. I'd rather give you returns while we're making returns. If we're going to make 20 or 40% return and we're giving you half at the end of the day, we'd rather you get half. On those debt funds, you will get a higher amount up front. You'll get like 1% a month or 0.8% a month, which is nice. You've got your stipends, you've got your whatever, and if you tied it to some type of withdrawal through another account, it's great. It keeps you satiated. And if you're at your later stages and you're looking to go for an all-in strategy, I might actually recommend not investing with us. We're not looking for people to just go all in and not work a day job, starting day one. We're looking for people who want to really grow that wealth. So, even myself personally, I know a lot of people are looking for, hey, my name is, John Smith. I am 52 years old, 55 years old, and I'm looking to retire right now. Should I invest everything with you? No, do not invest everything with me if you are retiring right now. Especially, our short-term investments, we say are 2 years, and we're hoping to exit as soon as 1 year. Those investments, if you don't have a job, if you don't have any source of revenue, and you put 100% into our projects that pay out in 1 or 2 years, and in 6 months you say, Adam, we need money now, you're not getting money now. You're getting money upon exit. So, we're starting to push into that strategy where, we want to have that conversation with you. We want to find out what you're looking to do. 2 years, 5 years, 10 years, 20 years. And that's the kind of strategy we're looking to build. I'm not Tom Brady, but I am the quarterback. I'm the quarterback for your investments. That's exactly what I do. We're quarterbacking your investments and, your strategy on the real estate arm. So, we're looking to make you more money and a higher return in a safer way than anything you're going to make doing stock market or whatever. But, you do have to have reached a certain point. We do not usually help non-accredited investors. So, I do apologize. We do have one program we're looking to work on more, actually starting Q1 next year, which is, we call the Race to Accreditation. That's a project where non-accredited investors who've got, say, $50,000 to $100,000 can reach out via my email, adam@realinvestwithadam.com. Reach out. We'll help you buy a project, which we call a tenant in common, which is you put the money in, we manage the project for you. You're gonna be making a certain return on investment. We're buying it for you on behalf of you. We're taking care of it in one of the now 9 states that we work in, and we're making sure that you're taken care of by one of our realtors. Those are not accredited, and those do not guarantee anything, and you are still taking a risk there. The thing is, with those projects, those are for our non-accredited or our smaller accredited investors. They still do require usually at least $100,000. So if you have less than $100,000 to invest in, definitely reach out. We have some strategies that we have available through agents. And I always say, if you don't have any homes or anything like that, or any real estate, you might want to start there. We do not really work with people who do not own any real estate at all. If you have just bought yourself your first condo, congratulations. We're super happy for you. If you've bought yourself your first single family home, that's great. That's a great first strategy. And if you're a accredited investor and you have that, and then you're looking to invest, that's great. If you don't have your own home, maybe it's time to focus on your liquidity. If you're not an accredited investor, we're not going to help you. But if you've passed those stages, let's see what we can do. And again, thanks for watching. If anyone has any questions, feel free to send me an email, direct message, anything like that. And hope you guys enjoy the rest of the end of the year. And I hope that answers a little bit for how to invest with Adam.